Hi there, I'm Tyler Bollhorn from Stockscores.com. This is the weekly market analysis for May 24th, 2010. Starting off this week, we have a chart of the Dow 30 ETF, symbol DIA, and the longer term upward trend line has been broken. We've talked about that in recent weeks. And on Friday of last week, we made a little, what I call a dead cat bounce candle, where we open weak and finish strong. That indicates to me that the market in the short term probably comes up, but that does not mean we are going to break the downward trend that has been building over the last 3 weeks. And so my expectation is look for rising prices in the short term, but I am not yet ready to come out of the bearish camp because of that break in the upward trend line. Canadian dollar ETF, symbol FXC. Canadian dollar, of course, has been one of the stronger currencies in the world and would probably be stronger if the US dollar wasn't a safe haven during times of trouble, which is what we've had in recent periods here. Much like the equity markets, the Canadian dollar sold off quite heavily, has come down to support, and should now bounce and move back up towards that little downward trend line. I like the chart longer term, and I think in the short term we'll see it rally back maybe 2 to 3 cents to the upside before it will encounter that resistance from the falling tops that have been building over the last month. Gold saw some profit taking after hitting new highs recently. We can see 5 or 6 days of downward move there, but today it broke that little downward trend line, and really it should have done that because we were right at that shorter term upward trend line where it does find support. So I think gold is probably more likely to go higher than lower. I wouldn't say it's a lock, but I would look for gold to move higher in the weeks to come. In a word, oil is ugly, but perhaps ugly means it's due for a bounce. We can see that it has broken some important support levels. I draw them here. There is certainly, because it's sold off so dramatically, there is some sense that you will get a bounce in this market, but when you look at the shape of this downward trend, it's pretty linear. And what I find is that trends, when they go parabolic, tend to bounce back, but linear trends are actually quite a rational thing. And so I don't really see any sign that oil will bounce. It would make some sense that it will soon, but I wouldn't want to be long oil here. I don't think there's any reason for it to go higher until we get a break of that downward trend line. The NASDAQ 100 ETF, symbol QQQQ, has broken its upward trend line only barely. It's kind of right there, so you could argue that it's still okay. Of course, if you draw the upward trend line like this, then it was broken some time ago. So we should see a bounce. We had that dead cat bounce candle on Friday as well, hitting a new low, coming back to close above its open. But we do have that cycle of falling tops to deal with. So to me, this is a market that is shaping up to be bearish, with perhaps some short-term buying strength coming in on short covering, some profit taking from the shorts. We may see it rally 2 or 3% in the very short term. The longer term, I'm still worried about this market. S&P 500, similar story. We have that falling top that has been building over the last month. We are far down below it, so the market should rally up to it, but the tendency will be for it to get stuck at that downward trend line and move lower. We do have some horizontal support here, which is helping that market, but I think the pessimism is building. Look for the short term to be higher, but longer term, I wouldn't be so confident. Despite the weakness in oil, the Canadian market actually looks better than its US counterparts. Its upward trend line has not been broken. We don't have that cycle of falling tops like the American markets had, and this fall back to that trend line looks to me like it should lead higher. So what I think will happen is the US dollar is going to cool off. That's going to help the Canadian dollar. That's going to help the Canadian stock market. The only variable in there is that oil price, because of course oil has an important impact on the Canadian economy. And if oil fails to bounce, that may spoil this upward trend line hold that we've seen thus far. But I do like the Canadian market to outperform the US in the short term. It looks to me like it certainly has a better looking chart than many of the US equity markets do. And finally, the US dollar, which of course has been very strong, but anytime a market is that far above its upward trend line, I worry that it is due for a correction. And that is certainly the case with the US dollar. Now, the US dollar could go much higher before it corrects. We never know when it will correct, and it really hasn't given a signal that it will correct. What I would look for is the potential for a formation of a falling top. If it were to come up into this falling top and then move lower, we're probably going to see it pull all the way back to that upward trend line. And of course, that would come with some resolution of the issues in Europe, and that would also help some of the other markets like the Canadian and Australia. Well, that has been the Stockscores market analysis for May 24th, 2010. Use it to hopefully help you in the week ahead. It looks like it should be a positive week, although I expect it will be a quiet week ahead of the Memorial Day weekend in the United States. Have a great week trading in the market, and trade well.